Umesh Revankar, Vice Chairman and Managing Director of Shriram Transport, joins us now to give us his understanding of high interest rates. Is it low demand or high interest rates is no problem in the short term? Good morning, Umesh. Good to have you back. Let's understand the dynamics. Interest rates will go higher. Interest rates at some point in time will start hurting demand. How far are we away from the transition where right now everybody is saying it's a necessary to increase rates, and at some point in time rates will start killing demand? How far are we away from that transition?
Yeah, good morning. See, my understanding is that interest rates, so repo rate increase was necessary because of the inflation. First, the inflation started with supply chain challenges, and the second, the inflation is because of geopolitical concerns and the crude price increase. The third one is the food price increase because of the geopolitical issues, especially wheat and edible oil price going up significantly in the last 1 month. That necessitated some kind of a rate increase. And that is something everybody expected, whether it was 25 basis point or 40 basis point. I think that is the only thing, it was not totally unexpected. But as far as I feel the rate increase will not straight away create a challenge for raising resources, because liquidity in the system is quite good. And bank is not the only source of raising resources. The other market also is equally liquid right now. So I think liquidity is good. So raising resources is not a challenge. So any businessman, anyone want to raise resource, borrow money, I think he is not short of money. So the demand is also equally good. Market is recovering. The demand is very good for all products, and including for home loans. So a marginal increase of the interest rates are not going to choke the what you call demand or dampen the demand immediately, is what I feel. I think everyone will be able to pass on any kind of interest rate to the consumer, because consumers are today in a mood to pay, because in this kind of environment, when there is a economic recovery growth, the demand will be always good.
Okay. Uh, how will the interest rate trajectory move in your business? Because for a bank, first they will start enjoying spreads, which is cost of liability will go up with a lag effect, cost of assets will go up immediately. Will Shriram Transport or the CV finance cycle work in a similar manner, which is that you will immediately increase interest rates for your borrower, but the deposits or the interest which you give on deposits, that will be increased with a lag effect?
See, we need not really act immediately, because for us, 20% of our liability comes from the bank loans, which is linked to MCLR. Rest all borrowing are fixed. So we will not have an immediate impact of the increased borrowing cost, and there's no rush to pass it on to the end customer. So, and most of the NBFCs, they play in a niche segment. When you are in a niche segment, you have pricing power. So you can easily pass on the increased cost. So may not be a shock or surprise as far as the our lending or credit demand is concerned. We should be able to very comfortably pass on if there is any kind of increase. So immediately there is nothing to really worry or look to be surprised on this. I think the business will be good, and we should be able to raise resources very comfortably, as there are multiple sources for raising resources.
Uh, so how do you see the spreads moving then? I'm asking very basic questions so that our viewers can really understand. Will it be in the similar manner like it works for banks then?
See, for NBFCs, it will be a little different, especially for us, because we have been always borrowing long term. Now, I would have borrowed, most of my borrowing is 3 to 5 years. I would have borrowed 3 years or 4 years back. At 3 and 4 years back, the MCLR, the rates were much higher, or the repo rates were higher at around 5.15. So I was borrowing at much higher cost, and today I'm borrowing at much lower cost. My incremental borrowing cost is much lower than my book borrowing cost. So I'm still getting that benefit of repricing it at lower price. So I don't have a big challenge as far as the spread is concerned. In fact, my last 2 quarters spread has gone up by around 30 to 40 basis points. So net interest margin for us will be very comfortable at this stage. I don't think it will have any challenge.
When interest rates they go higher, the risk of an NPA cycle emerges. How far are you away from that typical tipping point where the affordability for a CV financer starts working away? I mean, the unit economics are not in your favor.
See, it doesn't work that way. See, it all depends upon the demand. So right now, what we need to see is the CV
नहीं
cycle
उससे पूछ
went
क्या पूछना है?
the CV cycle went down in the last 4 years. So there is shortage of vehicle, and the vehicle demand is slowly coming up. When there is a shortage of vehicle, then the unit economics per vehicle will be always good because there is more demand. And even if there is a fuel price increase, the trucker is able to pass it on to the end consumer. Definitely, it will lead to some kind of inflation at the hand of the consumer. But the businessman or trucker will not have a challenge on his spread. He'd be able to pass it on to the end consumer. So I don't think there is any concern on NPA immediately at this point of time. And even in the medium term, I don't see any challenge.
Um, okay, now the last part of my question, which is that if somebody is a depositor with Shriram Transport, it's a rated bond, one of the highest. The borrowers here, the lenders here in this case, would say, when will Shriram Transport start paying more for deposits?
Yeah, see, there is on deposit front, maybe we are giving a fair return to our depositors, and there is nothing that we need to really increase the deposit rate now. But definitely, we'll definitely look at it and see whether the inflation is much higher, and whether the senior citizens and our depositors who have been giving depositors, we need to pay a little more. That we need to really see. But we're not rushing to increase our deposit rate immediately.
Summarize, Mr. Revankar, today's interaction by saying that, okay, interest rates have gone higher, interest rates will go higher, cost of financing a vehicle will also go higher, but in the short to medium term, you don't see that as an impediment which will reverse puncture or will have an impact on the CV financing cycle. Am I right?
Yeah, you are exactly right. Meanwhile, if there is a solution to geopolitical issues, everything can calm down. So we can't say that the things cannot reverse. So there is a possibility that things can reverse also. So don't really feel that no, this is going to be a long-term issue, or it is going to be consistently challenging issue.
Really appreciate your time, Mr. Revankar. So glad you could join us with your valuable inputs. Radar